We're still at the high in stocks relative to gold at the 1929 top right before the crash.
I work with retards.
Isn't that a little politically, incorrect?
Those goofy bastards are just about the best thing I've got going in this crazy world.
Can I do the countdown?
Huh? Oh, sure. Knock yourself out.
10, 9,
Okay, we're here.
8, 7, 6, 5, 4, 3, 2, 1, blast off.
Single female lawyer fighting for her client, wearing sexy mini skirts and being self-reliant. Hey, I'm pretty good.
We don't have much time.
Hey guys, Ralph here from the End Game Investor, and this is this week's Silver Report. I don't know how many more Silver Reports I'm going to do until the end game hits. It looks like all of the pieces of the end game are falling into place, and we're going to talk about that today. It looks like the Japanese domino is going to fall. It really looks bad. The yen and the Japanese government bond market are spiraling together to death in a tango of doom. That sounds good. Silver has passed 88 miles per hour, and we're about to see some serious.
When this baby hits 88 miles per hour, you're gonna see some serious shit.
We're going to talk about why it's still not too late to acquire some money for credit, to exchange your credit for money and divest from all central banks. We discussed on a previous video in the top 10 how gold and silver are not investments, they are divestments, and anyone who owns any currency in any form, whether it be physical cash or bank deposits, electronic, or even a central bank digital currency, should it, God forbid, ever see the light of day. It's all an investment in the central bank issuer of that currency. In order to divest from central banks, you have to get money, which is gold and silver, on which all credit is based. Why is it not too late? Well, because relative to stocks, gold and silver are still radically underperforming, and I'll show you exactly by how much they are radically underperforming, which means that standard S&P 500 hedge funds and stock investors, mainstream people, normies, and NPCs, they are still radically outperforming the gold bugs. When they start realizing that they are not, that is when the true crazy price increases begin for gold and silver, though it's not really a price increase. It's just a price in terms of credit increase. Though the prices of gold and silver remain relatively stable, it is the price of everything else that fall in relation to it. Before we get started with the slides, this is brought to you by my Substack, endgameinvestor.substack.com, where my next article will be about why and how people make the same mistake over and over about money, thinking that it is a point system or a convention or an invention of mankind. It's not. It's a thing. Credit is an invention. Money is a thing. Why everyone makes this mistake and why people are so prone to it, even if they are gold or silver bugs. This is also brought to you by the Dirty Man Safe. Use the link in the description below and use the code ENDGAME10 for 10% off at checkout. The Dirty Man Safe is a safe that nobody knows that you have, and you put it on your property somewhere underground. You put your gold and silver in it, or some gold and silver. This should be the gold and silver that you will physically need to get through the end game. I wouldn't suggest putting all your gold and silver in it. That is dangerous, but there should be some amount that is hidden from people that don't know that you have it, and you have immediate access to it physically, because the internet might go down during the end game, and if it does, any gold and silver you have stored away will not necessarily get lost, but you will not have immediate access to it. And if you want to support this channel, you can also check out my Patreon at patreon.com/endgameinvestor for as little as $3 a month, just to keep the bots and the peanut gallery out. In my next video, I'm going to go into the obligation to acquire land with gold and silver in the land of Israel, and the obligation of what the Israelites have to do when the end game comes involving gold and silver and land in the land of Israel. It's a controversial topic. I'm not going to talk about it here. Most of you won't like it, but if you think that you might be interested, check out the Patreon. For the first slide today, we're going to talk about Japan. Japanese bond yields climb further into outer space.
Space, the final frontier.
It's getting fast and furious now, the climb of Japanese bond yields, which means that the price of Japanese bonds is going down as the yield goes up. And as we all know, as the bonds go down, as the yields go up, the purchasing power of the yen goes down. And we are now in outer space. We have broken through the final resistance or the final support here, depending on how you want to see this. The final level here in 1998, it looks like we are far above it now at 2.186%. I think the high was about 2.2 today. And you can see after this, we have pretty much outer space, technical outer space. There's no other support or resistance to encounter here until we get close to 3.5, something like that. And the yen is gonna, the bonds, the yields are gonna go up high and fast from here, since there are no more technical barriers against that. And what happens when the bond yields go up? The yen goes down. This is how many yen it takes to buy $1. So the higher this goes, the weaker the yen is. We can see here we are at the final support for the yen at 1990, in the year 1990, at about 160, where we hit once, twice, 3 times in the past few months. This is the final resistance. Once we pass that, we are way deep into outer space for the purchasing power of the yen. Relative to the dollar, the yen is about to collapse along with Japanese government bonds. As we see here, the yen moves down as the Japanese government bond rate moves up. It's not a perfect correlation, but it's pretty tight, especially since April. The blue line shows Japanese government bond yields at 10 years. As they go up, the red line, how many yen it takes to buy $1, goes up too, meaning the yen gets weaker. It's pretty tight. As interest rates go up in Japan, the yen weakens. So the Bank of Japan cannot hike rates to strengthen the yen. It's impossible now. Why is this important? Because Japan is still the #1 foreign holder of U.S. Treasuries. The only possible way they can temporarily strengthen the yen is by selling U.S. Treasuries, buying dollars, selling those dollars, buying yen, retiring those yen. That's the only way they can do it, even temporarily. It will not last, but that's what they will have to do if the yen goes into a tailspin, which it will very soon if it's not already doing that. You can see here Japan, $1.2 trillion. If we look at all other countries not specifically listed here, that's 1.8 trillion. So Japan is about 2/3 of all other countries not listed on this list, and it's way ahead of the runner-up of the United Kingdom at $878 billion. 1.2 trillion is a lot, and you can see China is down to 688 billion. China used to be #1, but they've been selling off their treasury hoard for years now, and they're continuing to do so, whereas Japan continues to stack treasuries but not gold. The yen is going to die.
We are going to die.
And finally, on the Japan front, we can see here, this is from the Japan Times. That is Sanae Takaichi. She looks like a single female lawyer.
Single female lawyer fighting for her client, wearing sexy mini skirts and being self-reliant.
She's probably a very alpha female, but she's not very smart when it comes to monetary economics, because what she wants to do right now is call a snap election. You can read that in these 2 paragraphs below. She wants to call a snap election for February 3rd so she can strengthen her position. She thinks that she can do it because she's really up high in the polls, and she wants to print a whole bunch of money like Shinzo Abe did, except even more of it. And the Japanese also want that because they want bailouts. So much for the samurai, they'd be ashamed. Now, as to the subject of why it's not too late to acquire gold and silver. First of all, with gold, this is the gold to the S&P 500 ratio going back to 1920. Where are we now? How many ounces of gold does it take to buy one S&P 500 unit? We're about 1.54 right now, and this is a critical pivot point that goes back to all the way to 1929. This was the top of the bubble here in terms of the real purchasing power of stocks in 2000. 1,000. Ever since then, we haven't gotten close to the value of stocks relative to gold. But the fact here, first of all, that we were on a pivot line, and when this pivot line was last broken to the downside, it was 1973, 1974, where we entered into the 1980 top here in gold relative to stocks at about zero point 0.2 ounces or something like that. We are still at 1.54, so there's a long way to go here. But the point I really wanted to make here is that even though gold's at $4,600, we're still at the high in stocks relative to gold at the 1929 top right before the crash. That is how overvalued stocks were back then. They are still overvalued now at the same ratio of 1929 on the eve of the October 29th, 1929 crash. This zone is going to get broken. It's going to get broken hard, and we're going to head to the 1980 level here, which has been reached about 3 times, once in the mid-1940s during World War II, once in 1932 at the stock market bottom relative to the dollar, which was also relative to gold then because we were still on a gold standard, especially in 1932. This is going much lower. Gold is going much higher relative to stocks. It doesn't even matter if the dollar figure goes higher. What matters is that the mainstream stock investors start to understand that investing in stocks is not protecting them from what they call inflation, and they all flood into gold and silver at the same time. That is still ahead. Gold hasn't broken out yet. If you take that same chart and you flip it, flip the ratio, you can see here we are at the final resistance. It's a triple top here, and triple tops never hold. This will be broken higher, and once we do, we will be on the way to the 2011 top of about 1.7. I can't even see what that is around here, but when this breaks, you're going to start to see gold outperform stocks handily, and then the mainstream normies start to realize this, and then they will start stampeding because they don't care about the dollar figure. They care about their dollar figure relative to their stock portfolios. If their stock portfolio is doing fine and great, they don't care how much gold is in dollar terms, and they have a reason, and it makes sense. Gold really hasn't broken out yet, you know? Here, look. This chart is the same as this chart, except it's stretched out back to 1970. So if we go back here, we can see from 2011. Now you look at 2011 here, you can see this is that 2011 top here, but this is the 1980 top. There's a long way to go. It's just above 7. The 2011 top was about 1.7. We're going to get to 1980 levels here, and gold is going to blow everything away except for silver. You can see here that this is the gold rally relative to stocks in 2026. It looks pretty pathetic here on an arithmetic chart. We have a long way to go. It's not too late to get some gold and silver. Now, if we talk about silver, silver has broken out a little bit more than gold. Yes, that's true. And we are at the final resistance here of 2014. Actually, what I wanted to point out here in this chart that I forgot is that the level that we are at in gold relative to stocks is still very close to the 2015 bear market bottom in gold. In dollar terms, is 1045 right here, right where I'm circling, right below this circle over here, this red circle. We're very close to that number. So gold hasn't really moved much at all relative to stocks. Not at all. Plenty of time left. If we go to silver now, you can see it's moved a little bit more, but we're still at 2014 levels, still pretty close to 2015 levels, not as close as we are than gold, but we still have a long way to go to get to the 2011 top of about 0.04 here. We are at 0.012, so that's about a quadrupling just to get to the 2011 highs in silver relative to stocks. But you look at this chart and it will amaze you. Look where we are now and look where we were in 1980. We will get to this number. It's going to happen. And this tiny little thing here, this little bump, that's the silver rally. That's the current silver rally. It's nothing compared to what is coming. There is plenty of time to go. Plenty of, maybe not time, but plenty of space to go in terms of purchasing power of the monetary metals relative to stock portfolios. Now, Shanghai, this is the final slide, I think. This shows that Shanghai is running out of silver. They had a little brief bump over here when they got to lows of below 700 tons. They had a run to about 850. Now they're back to about 612 tons. The silver stocks are being sucked out of Shanghai But since Shanghai has a premium, there is an incentive to ship silver to Shanghai. So why are they running out of silver? My guess is that the silver stocks are being taken into private hands or they're being hoarded by industry and they don't trust the exchange. I don't know exactly why, but Shanghai is running out of stocks and so is London. This is the long-term chart of Shanghai silver stocks. Same chart here, just drawn out to 2013 when they started to stack silver over there. They got up to 5,300 tons or so, and now they're down to 612. And we're not going to go into this, but if you want to learn more about this, check out the Endgame Investor on Substack. This is the true size of the repo market. It's about $12 trillion. That's a lot bigger than anybody ever thought. $12.2 trillion, something like that. I talk about it in the Endgame Investor on Substack. Check it out there. So yeah, it feels kind of endgamey. Pieces are falling into place, but there's plenty of time to get gold and silver because gold and silver still have not outperformed mainstream stock portfolios. The mainstream normie investors are still radically outperforming the gold and silver bugs. Once that starts to change, you're going to see a real tsunami into money and out of credit, and then it's going to get really scary, even though for gold and silver bugs, it's getting kind of scary now because we know what's coming. Anyway, have a nice week. Have a nice weekend and I'll probably see you on Sunday or Monday, depending on whether the end game hits. I don't think it will, but yeah, we're getting pretty close.